Today's podcast is brought to you by Jerry Robinson's PACE Portfolio. Learn how to shield your investments from economic uncertainty with this complete do-it-yourself portfolio package. Learn more at paceportfolio.com. That's P-A-C-E portfolio.com.
Welcome to the cutting edge of the global awakening.
In the councils of government, we must guard against the acquisition of unwarranted influence by the military-industrial complex.
Well, it looks like the North Tower of the World Trade Center has just completely collapsed.
The U.S. dollar's status as the preeminent reserve currency is under attack.
This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America.
You really want the truth? Then just follow the money.
Welcome to Follow the Money Radio, a broadcast dedicated to your personal, spiritual, and financial liberty. And now, here's your voice of reason in the midst of global chaos, economist and best-selling author, Jerry Robinson.
Friends, welcome to our broadcast today. So glad that you're joining us. We have a lot to cover and so little time. So glad that you're joining us. FTMdaily.com on the web if you want to find out more about us and about the work we do right here each and every day. As always, I'm joined by my lovely co-host, wife, and national director of our Christian Financial Advisor Network, Jennifer Robinson. Jennifer, great to have you this morning.
Thanks, Jerry. It's really good to be here on this rainy afternoon here in the middle of nowhere. It's strangely cold in the middle of July.
The polar vortex is here. I guess the whole global warming thing's breaking down. I don't know. Are they still saying global warming?
It's climate change now.
It's climate change.
So it could go either way.
Yeah, okay. Well, we have a big show for you lined up today. We're going to be talking, first of all, about what's happening with Russia and the United States. We're going to talk about this ongoing currency war. But we're also going to be joined later on by Tom Cloud. He's going to be here with a precious metals market update. And we're also going to have John Burr stopping by. He's going to be here talking about a brand new free webinar we're putting out, a brand new free educational webinar on Social Security optimization. If you're somebody that's out there and you're nearing retirement and you're going to begin taking Social Security soon, he's going to have some really great tips for you on this free financial education webinar we're releasing today. And so stick around for that if you want to learn more about that. But first, it seems that the ongoing currency war that's being waged between the East and the West just continues to heat up. Now, last week, it was reported that worldwide usage of China's currency, the yuan, has more than doubled over the past year. And that was according to a new study from the Institute of International Finance. And then, of course, no doubt you heard about the new BRICS development bank that was being launched, and it's going to be headquartered in Shanghai. And this was put together by the BRICS nations. BRICS is an acronym standing for Brazil, Russia, India, China, and South Africa. And as competitors with the World Bank and the IMF, this new BRICS Development Bank and another little reserve arm that it's also created, these two new financial institutions aim to provide an alternative lending source to developing countries. So they're, in essence, directly competing for the same business that the World Bank and the IMF are going after. And of course, the IMF's located in Washington, and those are Western institutions. So this is a real big challenge to the U.S. Well, the same day that this agreement was signed, just yesterday, whenever the BRICS Bank was signed, the U.S. announced even more sanctions against Russia for that country's role in the Ukraine. So we have this ongoing currency war that's taking on different forms, and it's very indirect. Here's a clip of President Barack Obama laying out the new sanctions. Roll the tape.
On top of the sanctions we've already imposed, we're therefore designating selected sectors of the Russian economy as eligible for sanctions. We're freezing the assets of several Russian defense companies, and we are blocking new financing of some of Russia's most important banks and energy companies. These sanctions are significant, but they are also targeted, designed to have the maximum impact on Russia while limiting any spillover effects on American companies or those of our allies.
Well, these new sanctions were not much of a surprise. Russia struck back with its own announcement, though, the same day that it would reopen a listening post in Cuba that it used to spy on America back during the Cold War. So the base was set up back in 1964 after the Cuban Missile Crisis to spy on the U.S., and the covert surveillance base, which sits about 150 miles off of the U.S. coast in Cuba, once housed over 3,000 Russian military men at the height of the Cold War. Now, the reopening of this base is largely symbolic of the deteriorating diplomatic ties that exist between the United States and Russia. By the way, this announcement comes on the heels of last week's announcement by Russia to write off 90% of Cuba's debt dating back to the Soviet era, totaling around $32 billion. So Russia, if you've noticed in the news, Russia is really attempting to warm its ties with Central and South America as it looks to increase those who are within its trading sphere of influence. It's trying to increase its trading partners, and South America is just a sitting duck for Russia. So Putin has been trying to develop some more ties with those areas. Then, of course, there was the tragic news today of the Malaysian commercial jet airliner that crashed in a war-torn area of Ukraine. That took place this morning. The Western media were quick to point the finger at Russia and to kind of create some suspicion about the fact that it might have been Russia shooting down the plane. So far, the details are sketchy. But this is no doubt going to further strain ties in the region, and it may be used by the West to tighten the noose even more around Putin's neck. I've went back and watched some videos of this plane crash in Ukraine, and there are some strange things about it. In fact, you might just take a look at some of the video that you see. I'm sure there'll be something coming out in the news about how bizarre it looks. It looks bizarre. If the story is the way they're saying it, the story basically says that some sort of missile was fired at the plane. The plane then falls from the sky and lands and crashes. But all video that I've seen doesn't show any kind of smoke or trail or anything in the sky indicating that this thing just literally fell, and then once it hit the ground, the explosion occurs, but there's no trace of any kind of explosion in the air. So I don't really know what to make of that. I'm certainly not a physicist, but that was the first thing that I noticed when I watched the video. It was a little strange. All the videos I saw, there was nothing in the sky. And you would think if a missile struck a massive jet airliner, that all the gasoline in that jet airliner would have exploded. It would have left at least a black mark in the sky of some sort, some smoke, but nothing. It was completely clear. So I'm not sure what to make of it. All I know, friends, is that things are not always what they appear to be, especially when we're talking about this high-stakes game of global finance. Many of you are watching these markets and you're a bit concerned. There has been a lot of bubble talk going on in the mainstream press, people concerned, individual investors complaining that we have not had a pullback in these markets, a 10% pullback, a substantial pullback in 33 consecutive months here in the United States as the Fed continues to drive the market higher through its loose monetary policies and cheap money. And as many of you know, I've been trading stocks and currencies and commodities for nearly 17 years. I got started way back in, the mid-1990s. And as I look back over my experience and I see what's happened in the past, I got to tell you, I'm concerned. I am concerned about where this market is now. But at the same time, we take a look at all of our indicators that we have, and we see that this market continues to rise higher. But there's just a couple of things I wanted to share with you before we bring Tom Cloud on. Tom, by the way, is warming up in the bullpen. He'll be on in just a moment to give you an update on gold and silver. But I just wanted to give you a couple of ideas for those of you who are thinking about trying to avoid this overall market crisis. I know many people wish they could have avoided the first one back in 2008 or the one back in 2000 as well. But as we look forward and we say, what is going to happen? When is this market going to crash? Well, nobody knows. Nobody knows when it's going to happen. But we do know that the market will tend to give certain signs before it does. And that's why we have our market barometer. You can learn more about that at marketbarometer.org. But I'll tell you what I'm going to do whenever the market begins to sink. There's a few ETFs I like to buy. One is the VIX index. The VIX index is a fear index, and it goes up when the markets go down. My favorite way to play that is an ETF, and the ETF that I personally use is ticker symbol VXX. It is the iPath S&P 500 VIX index ETF. And again, it goes up when the market goes down. So I'll be buying shares of VXX once I see this market turn red, according to our market barometer. Another one I like to use is SH. SH is a ticker symbol that actually goes up in direct relation to the S&P going down. So it's an inverse ETF on the S&P 500. So when the S&P goes down, SH goes up. And when the S&P 500 goes up, SH goes down. They work exactly the opposite. So I'll be buying shares of SH. And for those who want to play it a bit more aggressively, there's also the 3 times inverse. It's a leveraged ETF. And these are real, they can really bite you. So you got to be careful with these things. The ticker symbol is SPXU. And that one is the ProShares Ultra Pro Short S&P 500 ETF. And in essence, what that one does is it goes up by a factor of 3 every time the market goes down by a factor of 1. So for every dollar that the S&P drops, this ETF, SPXU, is supposed to go up $3. Now, it doesn't always work that way because there's things called contango and other types of issues with buying futures. That's how these ETFs work. They buy futures contracts, and they tend to work okay, but there are some problems you got to be careful of. But those are about 3 ETFs that I plan on using when this market really begins to hit. There's some other ones I'm going to be using as well. Of course, we save those for our subscribers. If you want to become a subscriber and learn more about how we do all this, you can always go to our website, ftmdaily.com/store. You'll see a couple of different trading products that we offer, as well as our entire FTM Insider program, our market barometer. Everything's right there. You can always go over and check that out. So anyway, a brief recap. I'll be using 3 ETFs when this market begins to turn red. VXX, which is the VIX Index ETF, which goes up when the fear in the market goes up. SH, which is a conservative way to play a decrease in the S&P 500. And SPXU, and that is a ticker symbol for the ProShares Ultra Pro Short S&P 500 ETF. And that's a 3 times inverse ETF on the S&P 500. Again, meaning that your exposure is much greater than it would be just simply using something like SH, which is just a 1-for-1 against the S&P 500. As always, talk to a trusted financial advisor before you make any financial decisions. Don't do your financial planning on podcast. Use it for good information and then sit down with your trusted financial advisor and make your decisions. All right, now we're going to be joined by our good friend Tom Cloud. He's here with an update on precious metals. Let's go to that right now.
This is Tom Cloud, this week's Precious Metals Market Update. It's been a very, very interesting and incredible week for gold, even though the price certainly is up some with all the events of the week. But the main thing is to see the new currency with the BRICS nation getting together and putting $50 billion in basically for direct competition to the Federal Reserve, and they stand on the side ready to put another $100 billion in. And this is something very significant, and yet nobody's even talking about it, worried about it, thinking about it, and yet we're sitting here seeing what France did a couple of weeks ago in Germany and liquidating dollars and paying for natural resources with other currencies, and now we see the BRICS nations, South Africa, Brazil, India, Russia, and China, come in. And what most people don't realize, the 3 billion people those 5 countries make up is 45% of the world's population. And what this is in direct, contact with the special drawing rights that the IMF had. So, this is big, big, big news, especially for what it's going to do to the U.S. dollar when it turns down. And when the U.S. dollar turns down, we all know from watching gold for 14 years what's going to happen to the price of gold. And then later in the week, we had the people that are in charge of the London Gold Fix come out and looking at all the liability that courts have said the Silver Fix might have. We've already got Deutsche Bank completely, they just cold turkey quit the Gold Fix, and now Gold Fix is going to entertain different ways in London, similar to what Silver did when last week it was announced that the Thomson Reuters news agency would be doing the Silver Fix, which gives a lot of credibility to it, and this is something really exciting. Now, the gold people are already realizing that the same lawsuits came against them, they would go forward in court, so they're not willing anymore to do that. And then, of course, we saw the big bond company on Wednesday come in and sue major banks for $250 billion for manipulating fixed income markets. So we're now really seeing this thing accelerate. People are not waiting in line and going to react after their judgments. People realize now there have been fraud in these derivative markets going on for years, and many banks, and not only the ones in Portugal you're reading about, but many banks, not only in the United States but around the world, literally stand to be completely all of their reserves taken away. Now, you can sit there and say, well, that's not going to happen, but all it takes is one, and I can tell you it's never been closer than it is right now as we talk to our sources in Europe. And then, of course, on Thursday, we had Singapore Airlines shot down over the Ukraine, and gold went up $20 in a few minutes. And certainly as I record this, it's come back down some, but you got to realize now that there's going to be a lot of pressure to fix that, and plus you've got what's going on in Israel with them and the Hamas fighting, and people just act like same old, and it's crazy because all this stuff is coming to a head. And as I've been saying for the last few days, you've got to get ready before August 14th and get your metals placed, because that, once this fix goes to a neutral situation for the price fixers, it's going to keep a lot of shorts out of the market and their ability to pile on shorts when the market started going down. And this is very, very, very bullish for us. And then, sound like a broken record, but we're now seeing palladium just continue to ratchet up. Now, palladium today hit $900 an ounce. Just as we've been talking about all year, we've now got it up over 20% for the year, and I'm still telling you to buy it. There may be a pullback in here, there may not, but certainly many of you have missed the boat by just staying strictly in gold and silver because they're larger traded markets. But I really think a lot of you have not missed the opportunity. You may not make 30 or 40% in a year that others are, but there's still plenty of room for palladium to go another 15 to 20% this year between now and February. So don't feel like it's too late to add a little palladium to your portfolio. The last thing today I want to talk about is the rare coins. We just continue to get call after call after call. As I tape this, gold is up 9.9% for 2014, and the rare coin index is put out by a certified coin dealer newsletter is not even. It's slightly below. And as I continue to tell you, rare coins, more and more collectors are selling their collections because they realize the way the world is now is not a good place. They want to be in bullion, something that goes up or down the spot price of gold and silver, and not something with a huge premium for rarity. So I continue to, as I've said, and boy, have I been right for 3 straight years, and some of you are still holding rare coins, and you're making a big mistake because, first of all, gold's not going to be confiscated, and we've talked about that on Jerry's show many times and been right about that, and we have no hint that there'll ever be any confiscation. So if they did, certainly those coins could be confiscated anyway. So it's just important that you do that. And for the ones of you that are interested in precious metals, self-directed IRAs, you can call us and we can help you with a custodian to where we can help you buy gold and silver for your IRA. But if any of you have any questions, you can reach me at 800-247-2812. 800-247-2812. If you're not getting our email blast, you need to go to ftmdaily.com/gold or precious metals, and you can sign up for it. And if you don't like it, you can always unsubscribe. But I think we're headed into one of the most interesting 4 or 5 month periods we've had in gold in the past decade. There are just too many things out there that are in our favor that should continue to be a good move up, even though there's still people out there. I still get calls every week. Somebody saying gold's going to 700, 800, and when we review their track record, we see that not a one of them predicting these things have been right. They didn't predict gold to go up, and usually they're tied to stock market analysts, and they're just trying to keep people out of gold because they know the stock market is under strong pressure and is set to take a large drop in the next few months based on the valuations. So anyway, hopefully this helps. And with this week's Precious Metals Market Update, this is Tom Cloud signing out.
Follow the money. We'll return.
Attention stock traders, FTM Daily is proud to announce our latest resources for stock traders of all experience levels. Are you ready to wade in the stock trading waters? Well, unlock Jerry Robinson's trading room and receive his daily stock trading idea, complete with buy price, stop loss price, exit target, and daily trading alerts. Become an FTM insider and unlock the trading room instantly. But perhaps one stock idea per day is not enough for you. No problem. Get everything in Option 1 Plus. Analyze any U.S. stock or ETF for short-term and long-term buy and sell signals with our new Trigger Trade Pro system. Find FTM Insider and Trigger Trade Pro in our online store today. Visit ftmdaily.com/store or give us a call at 800-609-5530. That's ftmdaily.com/store or call us at 800-609-5530.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, well, joining me on the line today is my good friend John Burrs. You know him. He's been on the program several times all throughout the last several years talking about income strategies for people who are nearing retirement. In fact, John has been helping individuals prepare for retirement for over 28 years by making sure that they know how to maximize their Social Security benefits. Hey, John, how are you doing today?
I'm doing great, and I'm glad to be a part of the show again today.
Oh, you bet. Well, we're real excited today because we are releasing a brand new webinar today. It's a financial education webinar, completely free, that discusses Social Security optimization. Why don't you give the folks a real quick overview of what you're going to be talking about in today's webinar?
Yeah, the webinar is designed to help people know when and how to start taking their Social Security benefit. This particular webinar is really designed for those folks that have not started taking their Social Security benefit yet, but there's a small segment that will talk about Social Security taxation that could help those that are already taking their Social Security. But again, it's designed to help those folks make the proper choice of when and how to take their Social Security benefit.
For folks who want to check out this webinar, you can go right now for free over to ftmdaily.com/SSO. That stands for Social Security Optimization. That's ftmdaily.com/SSO. And when you do, you'll be able to watch the free 45-minute webinar. And below there, you'll be able to sign up for your own personalized report and consultation that'll provide you with some great strategies for your own Social Security account to see if you can maximize your benefits or reduce taxes. John, this is going to be a good webinar. The folks just need to go over to ftmdaily.com/SSO, and I think they'll really benefit from it. Great to have you on the program today. Thanks for pitching in your expertise on this webinar to educate the folks.
Well, you're welcome. And again, I always enjoy the opportunity and love working with your listeners. It's a good group of people.
All right. Well, you have a wonderful rest of your day, and we'll talk again soon.
All right. Thank you.
All right, friends. Well, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every day. It's an honor and a privilege to be a part of yours as well. And as always, I leave you with this final word. This time, again, just a thought. Don't judge someone just because they sin differently than you. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. We'll see you right back here again tomorrow. Until then, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before